Hey, control the trade here. Taking a look at Spotify, SPOT. Today is February the 1st, 2020. Doing a little charting and prep work for the earnings week this week. We have some big names reporting, Spotify being one of them. There's not that much information on this chart, being that they just went public, well, I guess, a year and a half ago, but there's a lot of movement and a lot of volatility, which means opportunity. Let's take a look here. Let's say that we are flushing down and the earnings report is received negatively. You would look for the 200 period moving average here, which is 139.71. I don't think that's going to be strong support for many reasons. One being that we just touched down on it recently, and going through that the third time shouldn't hold at all, especially in short term. 200 period moving average is better for like a long term look. But at the same time, the market does respect the 200 period moving average very much so. So typically it would be strong support. But then you have the 100-day period moving average right below that at 137.89. And what I find important are my quote unquote important numbers, one of them being 135.50. So that's another area that I would look for support and buyers in. And even more so, I like to look back and see if there's any gaps, especially for earnings, or when a stock is falling or rising rapidly. You want to look for it to fill a gap, find support there, and here's a gap right here. We have the close at 120.69 and the open at 131.11. So on a spike down, that could also be an area to buy or cover your short at that point. And if the earnings, what the, okay, sorry about that. I'm just doing a quick screen record video here, so I'm not going to do any editing. I'm just going to get a bunch of these out there, so bear with me. Apologize. We're talking about if it spikes back up. Looks like my app crashed there, but that's think or swim for you. It happens all the time. Back to the chart. On the way up, we have some resistance. 50 period moving average is 147.92. And I have an important number here, 149, which also happens to coincide with the 20 period moving average, are very close, which is 149.96. That would be a good psychological area of resistance, about 150. So you kind of couple that with the moving average and my important number, and that would be a likely area to kind of run into a wall there, to a ceiling. You also have this breakup candle here, and the high of that is 150.21. So all kind of in that little area of 150 should be pretty strong resistance, unless you're really getting a lot of buyers in there. I'm not sure the short float on this. I would recommend checking that out. Let's say the short float was higher than most. We might see a little bit more short covering and a short squeeze here, in which case we might start challenging up at the 152, 153 area. And if we can get above 153.35, you're going to see this try to fill another gap and go even higher. That's probably not going to happen all in one shot. But if this chart, let's say we finish above the 50 or the 20, then that filling that gap will happen pretty quickly. Thereafter, we'll be in a nice bullish uptrend again. One more thing to mention, and I learned this from MyStrategic Forecast and Lazy E Mini Trader, is which is you can get the links in my bio on my YouTube page and also my Twitter page. Definitely recommend the course. I mean, that's how I've learned to trade and to chart. So one thing I've learned is if it's tough to get over a certain number, let's say it keeps getting rejected or it cannot break down, the next thing you'll see is usually a gap above. This to me looks like we've been getting rejected a lot around 149, kind of coming up and under it. If the market does receive this news, the report is good news, then I wouldn't be surprised if we jumped over that 50 period moving average and maybe even jumped over that 149 at the open. So we'll see how that goes. That's just kind of a gut feeling. You don't want to, I'm not betting on that or anything like that. I'm just looking at all the possibilities here. You want to look at what could happen if we go down, what could happen if we go up. There's just no bias. It's just, I don't care what the name of the company is on the chart. I just want to see how the chart moves because all charts act and react the same way. That might sound crazy to you, not caring about what the company is, but I've seen it proven over and over again that It really doesn't matter in the short term if you're a day trader or even a swing trader. So that's my look at spot SPOT. Good luck out there, and remember, don't let the trade control you. Thanks for watching.